Hey folks, Dan Frio here, your nationwide mortgage loan officer with today's report on January 23rd, 2025. So in today's topic, we're going to talk unemployment because some unemployment claims just came in. We're going to look at the state of the economy. We're going to look at the bond market, and we're all going to also look how equities are performing off of today's news. What is today's news? Well, let's get to it. So here's what we're seeing so far today in rates. Mortgage rates haven't changed at all. So this is basically where we closed last night. These aren't my rates, folks. Okay. My rates, how do you get out and figure out? Well, let's first figure out where these rates come from. So Mortgage News Daily, right there up at the top, they survey lenders all over the country. They ask them 5 questions. Okay. The 5 questions are this. First 3 are pretty simple. These people are going to buy their first house. It's a single family home and they're going to live there. Okay, so that's probably like, okay, that's me. Well, the other 2 pieces of that puzzle, you have to go through here and learn about the survey, and you scroll down through here, and these people are actually putting down 25%. You can see right through there. They're getting a loan for 75%, and they have a 780 credit score. So if that's you, give me a phone call because I can most likely, hopefully, get you these rates. If that's not you, I'll give you all my information at the end of this video. So if you're out there looking to buy that first house, maybe that first investment property, or maybe even looking to refinance, hopefully I'll be your person. So let's get over to today's news. Here's what the Federal Reserve's looking at. So first thing I want to show you is the economy at a glance, okay? The first piece of this puzzle is the federal funds rate. You have to know these things, okay? Federal funds rate is where the Federal Reserve puts the rate that they control, okay? It's interbank lending. So basically it's this. If one bank at the end of the day doesn't have enough money to close their books, because let's say they need $1 billion in assets to be able to close their books for the day. Let's say they don't have it. Well, they have to go to another bank, get enough money in their coffers for overnight so they can close their books and be solvent. That's the interest rate they pay if they take that money. Okay, so that's that part of it. Well, the Federal Reserve was created for 2 reasons, really. One was inflation. Right over through here is to keep price stability in check. And the other piece was unemployment, to keep the markets or the economy at full employment. Okay, so that's what we're going to dissect right now. So far, we have this month, on the inflation front, we have the PCE coming out in a couple weeks. But on the inflation front, we had consumer inflation. Actually, the last reading came in lower than expected. And we had on the producer side, that came down as well. So far on the inflation side, things are starting to look good there. So now we want to look at the unemployment numbers. So you see unemployment rate right now is 4.1. Historically, that's really good. You go over to the markets, and this is what you're going to see in the headlines. U.S. weekly jobless claims increase marginally. What does that mean? So first thing I look at that and I'm like, okay, is this good news or bad news? Well, you have to really dig into the details. So if you go over to here, here's the data that we're seeing for today. Okay, so you can see on Thursday, the only really news we have coming in is initial jobless claims. All right, the reading last came in at 217,000 people were on unemployment or new claims. It was expected to tick up a little bit to 221 and it went to 223. Okay, so is this bad, good? Where is it? Well, you have to put it in a context. So let's get over to see this historically. Okay, so historically, here's where the jobless claims come in at. And it's basically, if you look at this and you'll say, well, it's kind of in line. It's a little bit higher than where we were the last part of this chart. Okay, so this is a 1-year chart. Here's what I mean. You always have to open the book. Okay, let's open the book to the next page, 3-year chart. You're looking at it right now here to here. Okay, we'll say that's in the middle. All right, well, let's keep opening the book. So this seems, okay, it's kind of in line, right in the middle. It's a little bit high. Well, how are we historically? Oh, okay, I get it. So if you just look at this, I can actually say, well, it's not very good. You look at this and say, okay, over history, it looks pretty darn good. So I'm okay with today's number there. Okay, so that's basically all the news we have that should be really affecting interest rates today. So let's get over to the bond market. This is what we watch on a daily basis, what the bond market is doing. So this is a mortgage bond right up at the top. You can see MBS. It doesn't say a 20-year treasury, a 10-year treasury, anything. It says MBS. MBS means mortgage-backed security. It's a mortgage bond. Okay, the yield on this bond is the biggest piece or the biggest part of your mortgage rate. Okay, so that's this piece. So what's added to this? Well, it's bank profits, margins, and then what we call LLPAs. So we focus in on this. What you're seeing here, though, is the price of the bond. So what you have to understand is this, is the price goes up on a bond, rates come down. When prices go down, rates go up. So we don't like to see red. Today we're seeing a red 6. That really doesn't mean anything. So that's really going to be no adjustments to rates. So we're still going to see rates right in this range right through here unless something changes throughout the rest of the day. So the next thing we want to look at is right over through here. The Federal Reserve's meeting next week. You guys might not have realized that because it's not really part of the radar right now. But in 6 days, the Federal Reserve's going to do their thing. And what are they going to do? So let's scroll down. Remember, we were talking about the federal funds rate is 4.25 to 4.5. So right now, it's saying 4.25 and 4.5. At the next meeting, there's a 99.5% probability that the Federal Reserve's going to do nothing, because if it's at 4.25 to 4.5 now and it stays there, that means they're not going to do anything. But the probabilities of what they're going to do keep increasing the latter part of this year. So nothing's really looking to really take place until June. I'm going to wait for June at that point, because over the next 2 or 3 months, we're going to get a slew of data in that's going to distort all these numbers. So that's what we're seeing right now in the bond and interest rate market. You go over to the stocks, Dow Jones is up. It's basically, let's just say it's flat right now. You got the Dow Jones up 100, NASDAQ down 100, S&P up 4, oil is up. I don't like that. And we have the 10-year Treasury ticking up just a little bit as well. Let's go over to see. I want to see what oil is doing directly. It's up just a little bit. And then cryptocurrency is up $2,000. This thing is so volatile, it's nuts. So that's our report for this morning. Okay, so the last thing is, if you're concerned about your credit, here's what I bring up. A lot of people, when we talk to them about their credit, they're like, I don't really know what my credit score is, or they'll blurt out, okay, I got a 780. Where did you get that score? Okay, so what I want you to do is learn a little bit more about credit. Go to creditscoresandmore.com. You're going to have a slew of data here that you can go through, and you'll learn more about credit, and you'll learn about some of the services I personally use myself. So that's that piece of it. Last but not least, who I am, what do I do? Like I said at the beginning of the video, my name is Dan Frio. Hopefully I can be your nationwide mortgage loan officer for life. Okay, I'm licensed in all 50 states as well as Puerto Rico, so I'm in the places you need me. And then last but not least, do I have the products? Do I have the rates? Well, yeah, I'm set up with ServBank, which is the 10th largest servicer in the country. Plus, we're also a large brokerage set up with over 30 different lenders. So imagine if you can put in one application, have your credit pulled just one time, and shop your loan over the 30 different places. That's what we do here. So not only if you're looking to buy that first house, maybe if you're looking to buy that first investment property, or even looking to refinance. I just put a video out yesterday on refinancing. You might be leaving a lot of money on the table if you're in the high 7s on your mortgage rates. So check that out, see how much money you can save. Please reach out to us so we can help. So how do you do that? Go to therateupdate.com. There's a few functions that you can do for us. One, if you want to put in the application, you can do right there. Just click that. What will happen is I'll get triggered that you completed your application. I'll immediately get you on the phone. We'll talk about the situation and take it from there. If you'd rather schedule a consultation with me, Alan, or David, you can do that as well, right up through there. There's only 3 of us going to answer the phone, folks, even if you call in. What's our 800 number? Well, let's scroll over there, and I can show you that as well. The 800 number we have right here, and it's going to go to me, David, or Alan. There is no call center or anything. It's just the 3 of us. It's 844-775-5626, or you can reach me personally at dan@therateupdate.com. But please do me a favor. If you have just comments, you can leave those down below. If you want to reach out to me with a question and need some help, please email me directly. Please include your phone number and your name. I'd love to call you and chat about whatever situation you're looking at. So thanks so much for watching, folks. God bless. Have a fantastic afternoon, and I hope to see you back here at the closing bell. Take care. Bye-bye.